Hey everyone, welcome back to my YouTube channel, my no issue ACCA classes. So in today's video, I will solve few questions related to the make or buy decision, and this is from the ACCA PM subject, that's also known as F5. Alright, so if you are watching my video for the first time, don't forget to subscribe my channel and share it among your friend. In case you are existing viewer, don't forget to hit the like button as well as this notification bell icon so that you will be updated regarding my new videos. So in today's video, as I said, I will discuss the few practice question related to the make or buy one. So first question is, which four of the following are to be correctly included in the consideration in the make or buy decision? So basically in the make and buy decision, we have to decide whether we should manufacture that product within the organization, or or shall we buy it outside the organization, like outsourcing. Not only about the product, it's also about the service. So in make and buy decision, we have to consider many things. I will make a separate video on this topic, but for time being I will explain the concept along with the question, right? So first question is asking that out of these six option, which four will be correctly included, or we will take in the consideration if we are taking a make or buy decision. So first one says, first statement is saying that the amount of reallocated rent cost caused by using the production space differently. So you are using the production space now. What the first statement is saying, that you are simply allocating your rent cost to the production space. So even though you decide make or buy decision, this will not be taken into the consideration because it's not relevant, right? So second one is the variable cost of the purchase from the new supplier. Of course, if we are deciding to buy certain product from outside the organization, in that case we will consider the variable cost of that, the materials or the any things that we are buying from the new supplier. Third is the level of discount available from the new supplier. This is also true that if we are purchasing any product or the services outside the organization, of course if we are getting the discount, we will consider that in making the buy or making decision, right? Okay, fourth one, the redundancy payment to the supervisor of the product in the question. Basically, when you will choose to buy the product from outside the organization, rather than manufacturing it within the organization, in that case your employee who are working in that part will be idle. So either you have a option to shift them to the other part of the work, or you have an option to make them redundant, right? So in that case redundancy payment will be considered. So that's why it's also important to consider the redundancy payment in relation to the make or buy decision. Fifth one says a saved labor cost of production staff redirected to the other work. So if you will redirect your staff to the other work, it won't save your cost. It won't matter, right? So we will not consider that in making make or buy decision. So material no longer bought to manufacture the product. Of course, if you will directly buy those products from outside the organization, in that case you don't need to consider the material. So basically option 2, 3, 4 and the last one seems to be the correct that we need to consider in a make or buy decision, right? So in this question they are particularly asking if you will choose to make those product or not, what will be the factor, like we need to find out the any additional cost that we are incurring in relation to this decision, or any cost that we will save in relation to this decision. So I hope this is clear now. Okay, so next one is 115, and what the question says, which two of the following items are valid factor to consider in the decision? So background is, while a drag and drop style question is impossible to fully replicate within the paper based medium, some questions of this style have been included for the completeness. ACE Limited is considering whether or not to cease the production of leather bound diaries. So they are considering not to cease the production, right? Means they're not deciding to buy it from the outside the organization. They're still thinking to manufacture it within the organization. So now we have to find out the two option that will be valid in relation to this decision, so that we have to figure it out. Okay, so 123, what the question says. Sorry, 115. The first option is, the diary made a loss in the year just past. So if the diary, this product has made loss in the past year, that will not be relevant in this decision. As we have discussed in the relevant costing, there are few type of cost, like if you remember that future cost, incremental cost, we have other sunk cost, there are many more, right? But if we will consider these, like first statement, the diary is made a loss in the year just past. This is the historic information, past information, also called the sunk cost, right? So it won't be valid factor to make the decision whether we should manufacture or cease production of the leather bound diaries. So this is not the, I mean the this will not be the valid. Second says, daddy made a positive contribution in the year just past. Again, this statement is talking about the historic information, historic data. So it's a sunk cost, right? Third, market outlook in the long term looks very poor. Of course, if your market looks very poor, in that case, it's better to cease the production rather than manufacturing it, right? So B seems to be valid. I mean, C seems to be valid. And fourth, the budget for the next year shows a loss. So this has actually not been incurred. It's only a budget, it's a planning. So it won't be this will not be the valid in order to take the decision regarding to manufacture or cease the production. Again, this is not valid. So second last, the business also sells pens and many diary. Buyer will often also buy a pen. So basically, business sells pen and the diary, but the buyer will often also buy the pen. So this seems to be relevant because the company are selling the two product, and if buyer choose other or most of the buyer are visiting the store for that product, so it's better to continue those product rather than manufacturing the one that has no demand in the market, right? So second last seems to be feasible. And last, the business was founded to produce and sell the diary. So this was at the time of incorporation, right? So it's again a past information. It won't impact. And if we have started the business to produce the or sell diary, so it can be changed in the future, right? So this is also not valid. I hope this is clear now. Okay. So what the next is question is, what profit or loss will arise if product X is further proceeded? Okay, so background is, Jorizo company makes a joint product X and Y, 120,000. Joint processing costs are incurred. So they are making the joint product X and Y, and the 120,000 of the joint cost are incurring. At the split off point, 10,000 unit of X and 9,000 unit of Y are produced with a selling price of 1.20 for X and 1.50 for Y. So the unit of X could be proceed further to make 8,000 unit of the product Z. Extra cost incurred in this process would be the fixed cost of 1600 and the variable cost of 0.50 per unit of input. The selling price of Z would be 2.25. So what profit or loss will arise if product X is further proceed? So now if we don't proceed product X, in that case we will sell the product X at the selling price of 1.20, and we will earn how much we will earn. Let's calculate this first. Okay, so if we are before processing, before processing. So if in that case selling price of X is 1.20 into and unit produces 10,000, right? So it will give you the total selling price of, what is the amount? Is 12,000, right? Now if we choose to process the product A, so after processing, right? So if we will process, in that case this product X will be used in the other product Z, and whose selling price is 2.25. That means total selling price we will earn will be, but wait, here we can't take 10,000 because the unit of X could proceed further to make 8,000 units. So if we will put the 10,000 unit of X, so final outcome of product Z will be only 8,000, right? So we will only take here 8,000, and that will give you the total amount of 18,000, right? So now okay, so this was before the amount we are earning, and after processing, this is the selling price. Now we have the variable cost as well, and what is that? It's 0.5, and but this variable cost is incurred in relation to the input, and our input is product X, and how much unit we are having? 10,000, right? So we will multiply with the 10,000. This will give you the cost of 5,000 that we need to deduct it from the selling price, and additional cost we incurred if we process is the variable cost, and this is particularly relation to this processing. So profit we will earn here will be, net profit will be 11,400, right? Yes, 1300, yeah. So if we are not processing, we are earning the cash of 12,000, and if we if we proceed further process the product X, in that case we are earning 11,400. So we are going toward the loss of 600 if we choose to product X is if product X is further processed, right? So 600 loss, right? Okay, so moving toward the next question that we have. Considering whether to continue make a component or to buy it from the outside supplier, it used 12,000 of the component each year, and the internal manufacturing cost compromises the 12.50. They have provided a breakdown as well. If the direct labor were not used to manufacture the component, it would be used to increase the production of another item for which there is unlimited demand. This other item has a contribution of 10 per unit but require 8 per labor unit, right? So what is the maximum price per component at which buying is preferable to the internal manufacturing? So basically here the question have provided the information that if we choose to make the produce the component each year, that is the 12,000 of component, in that case the internal manufacturing cost per unit has provided that is 12.50. But if the but if direct labor were not used to manufacture the component, it would be used to increase the production of another item, and that will generate a contribution of 10 per unit but require 8 of the labor per unit. Here the tricky point is that one unit cost 8 of if we talk about labor cost per unit, that is the 8, but how much we are paying for the labor? It's only 4, right? So here you can see in the breakdown, that means 2 hours of labor is required to produce the 1 unit, right? So how much contribution is earned in the 1 hour for that is your 10 divided by 2, because we are using the 2 hour of the labor. So that means 5 is your contribution per labor, right? So here, let me do the calculation, then you will be able to maybe figure out. So basically question is asking what is the maximum price that we will pay if we are choosing to buy rather than manufacture it in the internal. So currently we are costing this cost, right? Up to here it is clear, right? So 3 we will take, 1 we will take, and 2.50 we will take, right? Because it's specific, right? We will not take the other fixed cost because it will incur anyhow even though we don't choose to produce, right? So if we question says specific, in that case we need to consider. But the point is regarding the labor here, 1 unit required, if we talk about the labor cost per unit, that is the 8, right? But there 1 unit required the 4 labor, 4 cost per unit, right? For if we talk about the labor, right? So here, but we are using the 8, that means we are using the 2 labor to produce the unit, 1 unit of the component. So that's the reason we will divide 10 by 2, because here we are using the 2 labor, because in the internal manufacturing cost the direct labor per unit is the 4, but total cost involved in the product is 8. Means that means we are using the 2 labor. So we will calculate the contribution per labor, right? And then we will add it along with the direct labor, because if we choose this the if we take this labor. Okay, so if we manufacture this component internally, we will incur the labor cost of 4, right? And internal manufacturing means that we could not use our labor hours to make another item, so that would bring us $10 contribution. That means we will lose this contribution, right? So that's why we have added this contribution along with the labor, and adding all these cost except this other fixed cost one, adding rest of all will be the, that is the maximum amount that we can pay for the internal manufacture. I hope this is clear now. So in next video, I will make the video for this question related to the risks and uncertainty. So I hope this video is useful. In case of any confusion, do let me know. I will try my best to explain again any question if you required. So thank you so much guys for watching. Have a good day.